Before we begin, the purpose of this video isn't to give advice or recommend anything on any type of trading. This was just my thought process going into my first options trade as a beginner options trader. So in the past few weeks of researching different strategies and whatnot, I've seen some videos of people day trading options off the S&P 500 and analyze the chart from market open and basically wait for it to have a dip. So the screenshot here is about half an hour after market open. I could have entered at this point because the market did open pretty low compared to the closing price of the day prior, which is indicated by the black dotted line. But since it was my first options trade, I wanted the market to have a visible dip in the same day. And after about an hour, it did end up happening. So for me, this was like the ideal situation to enter with an options call. And an options call basically means you think the price is going to go up, whereas an options put means that you think the price is going to go down. So of course, an options call is bullish on the market, and then an options put is bearish on the market. Okay, so to actually place a trade, you just click on trade options, click on the date you want the contract to expire. In this case, I chose a 385 because even though it was out of the money, I felt pretty good about the price going up to 385. At the time, I was trying to manually put in the limit price, but I didn't know after you put the number of contracts you want to purchase and click review, it'll automatically generate the middle number between the bid and the ask. And that's probably the reason why my order didn't get fulfilled, so I had to cancel it and then make a new order with the better price of the current market at the time. So I typed in the new price. Again, I could have just automatically generated it by clicking review after the number of contracts, but this time it did end up getting fulfilled. I just had to wait a few seconds. So after you purchase a contract, it'll show up on your Robinhood homepage along with the other stocks you have, and then you can monitor the current value of the contract at that time reviewing it. For this trade, I tried to wait until I was either 10% in the green or 10% at a loss. When you're trading options, you gotta be pretty strong because at one point it could be maybe like minus a ton, but then the next second it could jump up by a lot and vice versa. So you really just gotta be patient and then stick with the stop loss you have in mind and the point of taking profit. So in this trade, I did end up getting a 10% return, so I decided to sell the contract at that point. And to do that is pretty much the same as selling another just a regular stock. You just click trade and then you click sell, and then you sell the number of contracts you want to sell, and then again you don't have to manually put in the price. In this case, it got filled right away. That last clip of me selling the option was actually from another trade, which I did after the first one because I forgot to record me selling the first one, so I wanted to record the process of selling it just to inform you guys of how to actually sell it. Anyway, here's the transcript of that first trade. We bought in at 179 and then sold at 204, so we got a total profit of $25. And here's the transcript of the second trade I was talking about. We bought in at $157 a contract, and then we sold the contract for $173 for a total profit of $16. So you're probably thinking, wow, we won our first two option trades and we made 41 bucks, but I ended up getting a little bit too confident and then I bought a put option, which meant that I thought the stock was going to go down at a point, but we at one point we got down to negative 30% because I didn't end up settling at a negative 10% stop loss. So yeah, that's just the whole name of the game in options trading. You always gotta be ready to, to see a big loss or a big gain. In this case, I did end up waiting a bit. So it ended up going to, I think, negative 20 bucks. So we lost half our profits just on this one trade. So I hope you guys enjoyed this overall rundown or breakdown of an actual options trade. Keep in mind, you can do unlimited options trade on Robinhood if you have an account that has less than $25,000. If you have less than $25,000 in your account, you can only do 3 day trades in 5 trading days. And if you actually are a beginner in options day trading, make sure you do a lot of research, watch a lot of videos, and just trade with the amount of money you feel comfortable losing, because in options day trading there's always a chance you can lose all the money you put in the contract. Other than that, good luck, and hopefully you guys learned something from this video.